not posting that video yet. You're gonna have to figure that out.
Yeah, I can. I can eat spaghetti, but I actually hate it.
All right. Okay, today. Everyone have their notes out? Computer's white? All right. Today, we need to talk about insurance. We've been talking about how to buy cars, how to get rebates or trade-in value, different strategies dealerships use. Especially yesterday, we talked about deferred prices and how a company can try to get you to pay more without you even realizing it. All right. So here's the idea. Today, we're talking about insurances. So this is section 5.6. Like it went back a few sections, but it's insurances. As I said, we're going to kind of bounce around. I would be expecting for us, I know this seems weird, we're kind of nearing the end of chapter 5. I said there's only a couple sections we're going to cover. I'd be expecting a test maybe middle of next week or the end of next week. No joke. Because we're almost done with the sections. We just have to kind of clean up, do the last section or two, and then we take the test. So maybe middle of next week we'll start maybe even reviewing for tests next Monday. I know that's short turnaround, but I said this section, this chapter is super short. So tests coming up, so keep that in mind. I'm kind of warning you right now. All right, today, we need to talk about coverages. When you go to an insurance company, or you have to do this for the first time, you're going to realize insurance is super, super, super expensive when you're young. There's this rule, okay?
What's the first word there? His?
Make it bright high risk. Yeah, I combined high risk and just a hiss. That's weird. Right? Didn't realize I wrote that. All right. God, didn't even realize I did that. All right. Okay. What you're seeing here is your risk coverages and what you guys have to deal with. If you get one speeding ticket when you're young, like below 25 or below even 18, you can potentially lose your license depending on the severity of it. If you're on a permit, you will not get your driver's license till you're 18 anymore. That's kind of the new rules. But you can be eventually dropped into what they call high-risk insurance. High risk is crazy expensive insurance. Like, super expensive. It's almost double to triple what normal kids would pay for insurance. And it doesn't matter if your parents are on the insurance. If you're the one driving it, it affects your coverage, and that coverage will go up on your car. There's low risk. This, for everyone in this room, will hit you when you hit 25. When you hit the year 25 in age, your insurance will halve in price. I can give you the idea. You have a question, Aaron?
Yeah, where are your glasses?
I put them somewhere. I can't find them. I had them this morning, and I took them off to do something, and I don't know where I put them right now. They're probably in my desk somewhere. Yeah, I'm getting there. Like I'm still it's really bad.
You penny machines.
All right. Okay. Hey, you need to shut up. Shh. People can't even hear. Okay. When you hit 25 years, when you hit 25 years old, your insurance will literally cut in half. No joke. In high school, I had good grades, so I'll show you how that affects kind of your insurances. But it didn't really affect mine because I was a male and I was at a certain age and stuff. But I had one accident. One accident in my high school when I was at high school, and my insurance went to high risk. And here's the worst part: I wasn't even in the car. My car got hit in a parking lot, and my insurance went to high risk.
Wow.
Yeah, that was real fun. Thanks for that one hit, and that person had to repair my car, but they're not paying my insurances. My insurance went from like $300 every 6 months to $600, and I had to pay that myself because they doubled the price. That's a lot of money when you're in high school, paying for a car yourself. And it wasn't even mine. I was in the weight room and my car got hit. Not happy about that situation. Now, what happened here is that I was paying $600 a month or more, depending on what car I had, because I switched cars. At age of 25, it literally lowered in half. It went from $600 to $300, no reason other than I hit 25 years of age. That was it. For females in here, you guys will be at half of what the males pay in insurance, no matter what. So if unless you have a speeding ticket or some accident. So here's the idea. If males pay $300 on average every 6 months for car insurance, a female will pay $150. At 25, their insurance won't go down as far as a male's will, but it will still go down. It won't go down to half, but it will go down. Normal, typical behavior, that can be anything as long as you just have a decent driving record, you don't have speeding tickets or accidents at all. So the idea is that this thing affects you. And I'm going to show you what the insurance numbers are, like what they give you when they quote you numbers. Because there's a lot of different things. I've had a lot of cars, so I've spent a lot of time in insurance companies to talk about if can I even afford the insurance on this car that I'm looking at. I know that seems silly. I do that before I agree to buy a car. I go look at the insurance company. What is this going to cost me insurance? I can't afford that car. So, because the insurance spikes. You'd think like trucks or SUVs are more safe because they're bigger, but they have a higher risk of causing damage. So your insurance goes up, which is totally like backwards what you think. The cars that have the best insurance rates are a car or like a mom van, basically. They have the best insurance, super low insurance coverage, because they're super safe and they're not like overly big like a truck or an SUV. They won't cause as much damage. Now, here's the numbers I want you to write down on a piece of paper. Okay, I'd like you to write this down. I know that seems weird, it looks like a date. It's really not a date. What this number is, this is your risk coverage on what your insurance company has. And I'm going to explain these numbers here in a second. Okay? Every insurance agent that you will talk to will tell you this number. They'll have different policies for you. I'll show you different numbers that they can throw at you. This is the default one that most people have to go with when they first get a car. Okay? What this is the payout for different types of damages that you would cause. They don't cover a lot, and I'll explain that. Okay? So, what this is, if you have a personal injury, so that could be to yourself, that could be to somebody else, but under your insurance, and this is, by the way, this is full coverage. This isn't liability. Liability, you have to pay all out of pocket. So personal injury, the first number is 10,000. They say 10. That's the payout they give you if you have a personal injury. Up to 10,000, by the way. It's not guaranteed 10,000. It's up to 10,000, and that would cover both or all parties involved. So if you got in a wreck and you caused it, you're paying 10,000 to whatever damage you caused in the person across from you. Now, anything past that, because I know like if you get sent to the ER and you have to get life-flighted, you're already past 10,000. That's all out of pocket then. So if you have somebody that gets life flown, like you got in a wreck and they have to be life-flighted or ambulance taken, it's probably a $25 bill right off the top. You're paying $15,000 out of pocket. Because that coverage didn't cover one person. Boom. So if there's multiple people, you're adding up that 25 grand each time if you're past the 10,000. So that's why they want you to get better coverage. They're higher pricing. That's how they get it. Okay? 20. The 20 in the middle. This is for any vehicle or any vehicle damage you're causing. This is 20,000. 20,000 in vehicle coverage. So you can go through that pretty quick if you hit a new object. Okay, this could be you hit a tractor. Tractors are a lot more than $20,000, and if you cause the damage, you're paying that. That you could have hit a $500,000 tractor. I wouldn't want to do that payment. Okay, no joke. This is what they cover. Everything after that is out of your pocket. Okay, next. This is for any property damage. Shh. Property damage. You run into a street post. You run into a fire hydrant. You run into a building by, you forgot to put the car in park and it runs into the front of a building. Okay, whatever damage you cause, it's up to $15,000 covered. No joke. You take out a fire hydrant, you got more than just $15,000 problem. Because now you have the water bill that you're paying for as well, for all the water that's spilled. Okay, it's a lot of money in those situations. Hitting a light pole. Light poles don't sound like a lot of money until you got to figure out the city is going to put in the cost of repairment and what it costs to actually have it installed. It adds up quick. Okay. I think the average. I think when I was in high school, we had a kid that hit a light post. I think it was $3,000 a light
You've
post.
never hit something.
$3,000. It doesn't sound fun, but it raises your insurance company. Okay. Now. Okay. This is just one type of coverage. You can go up even higher. I know that my insurance company, like this is the default one that they go with. 20, 40, 50. Well, what do they pay out for personal injury? $20,000. Vehicle damage. 40. Property. 50,000. They even have ones for higher priced cars and trucks. You can go do 50, 100, and 200. That's if you have a really expensive car. Okay? Or it's a special limited edition, or it's like a tractor, like the coverage changes. Question?
Wait, so like, when I was in Asian, this truck get to the light post
Yep.
and took like a chunk from the bottom half off.
Yep.
Would he have to make that? If it was his fault?
Insurance will cover the property damage if he has insurance, but then it also has to cover the vehicle damage and any personal injury. So these are all being affected in that situation, and so they're going to pay out a maximum of this amount of money per object. So if it was, light post, it might be $3,000. Boom, that's $3,000 off the
There's like
top.
electrical.
Yeah. So in that situation, they cover it. But probably what happens if it's your fault, you still have some form of bill, like they have a certain coverage, like a certain percent that they take off the top.
It was a high speed.
Then they're probably paying it all. And insurance will say, we're not paying it. So they
It
cover
was
it.
quite wide.
Yeah. So, all right. Now, here's the thing. I want to talk about what it will cost you. So, because you guys are seeing this number. So, here's the idea. What these are. These are the policies that they look at. To find the number that you're looking at, typically this is what my insurance company does. This is what my insurance company tells me. They tell me what my coverage will be for that 10, 20, 15 rule. They'll tell me what the 15 coverage is. They add the first two together for you. They add the second one separate because you can detach property damage off of it. And what the coverage is you add those two numbers together. So I add up, the coverage that it cost me to get $15,000 property, the coverage for vehicle and personal damage, because again, you can just buy this separate. I would not recommend that. So you have this. So it looks like what my insurance will cost me is $500 every 6 months. That's what it looks like to me. Then what they do is they divide that by 6 for 6 months, and that's what I'm paying per month. I pay a monthly payment. Trust me. If they offer you like a monthly payment for insurance, like automatically debited out of your card, take that. Nothing's worse than trying to pay your insurance every 6 months and realize, oh my gosh, this month I have to pay that $600 insurance bill. Take it out month by month so you don't have to save that up. Okay, so now, what affects this? Because these are the numbers, like they'll give you quotes. If you want this rule, maybe it's going to be 800, and maybe this is 600, or sorry, 600 over here. Maybe this is the quote. That'd be a $1,400 bill every 6 months. Maybe I can't afford that type of coverage. Now, why do you ever want to do this? This is what I look at, no joke. This is what I look at when I'm looking at buying a new truck, buying a new car. Like right now I'm in the hunt for a truck. That's what I kind of want. I'm looking. Before I go and purchase, I talk to my insurance company and I talk to them, what's the coverage on this truck, this model, this year? What is my payment going to look like? If it's higher or lower than what I'm paying now, that definitely affects my decision. Because like if I know that truck is way higher risk because it's bigger, that's something that I might say that's a no-go, and I might just nix the truck idea. Get rid of the pencil, that's gonna be mine. So, now, here's the thing that can affect you guys right now, other than that stuff, the pricing. If you have good grades, good behavior, something like that, where you, the grade policy, like if you're on a B honor roll, A honor roll, my insurance company allows that you can pay like 86% of the actual bill. So what they're doing is they're taking off 14% for just having good grades. That was anything from like a B honor roll and up, so like 3.2 and up. Okay? So what that means is I would take $500 and take it times 0.86. And that, just getting simple grades, something I'm in control of, I can lower that bill automatically. So 0.86. So really my bill,
There was a mouse in my room.
so my bill 0.86 times 500, $430 every 6 months. Divided by 6, I'm paying $71 a month. That's actually pretty close to what I pay. But I also have a lot of vehicles on my account.
Ward, what do you have for insurance?
What?
What do you have for insurance?
Dude,
State Farm.
if I see a mouse, I run the other
So,
way.
the reason why I went to State Farm,
What do you mean we saw
because I've had them since high school. They always lowered my, every year that I didn't get like a wreck or something, they would lower my rate, so that's nice. But then they also, the thing that really affects me is that if I get like more than one vehicle, because I buy cars all the time, if I get more than one car like on my insurance at the same time, all those things go down in price. So instead of buying them separately at $500, if you buy a second one, maybe it's only $550, and you cover both cars.
It's almost like my cell phone plan.
Yeah.
Well, if I put like another cell phone plan, it'll be cheaper for like.
Yeah. I mean that's all cell phone companies are kind of doing that. You can get up to 4 phones for like $170 a month. Yeah. If you want to do that, like most people, if they get one cell phone, it's like $120. If you want to get 2, it's like $140. You can get 4. I would, and I'm not even joking. I'd go buy 4 phones, even though I'm only using 2 of them, like in my house, because I know the bill will be lower. Same with insurance. It may be actually more cost efficient to have more than one car on your policy. So go buy the extra car. I know that seems super dumb. You have an extra car on your policy because it lowers your insurance. Now, if you can afford that. Even it could be the dumpiest car that you never drive. In California, like different states have different policies. California, whatever your primary car is, that's what your insurance covers. So what I mean by that is, let's say in California you drive one of those little smart cars, like that little 2-seater smart car. If that's your primary car, that's the insurance you pay. If you have extra cars, you're only paying the insurance on your primary car. So what people in California do, they get a smart car that costs like $5,400, and then they buy a bunch of BMWs and high-priced cars because all their insurance is on the stupid smart car that they never drive. They say it's their primary, but it's not, and all their insurance is only over that $50 policy every 6 months, even though they have a Lamborghini in their garage. Okay? So, smart. They bought a cheap car because that's their insurance, and all their expensive cars go off of that and cover it. Nice. Alright, now, the rest of the time today, you have time to work on the assignment. I'm going to put it up on the board. This is the assignment I handed you yesterday. Some of you are already done. You're good to go. You can work on wherever you need to. If you're not done, you need to be working on it right now. What's up? Me? No.